Whatever the occasion, effortless elegance is right this way. Because Hilton brings you new ways to stay courtesy of the Nomad London. And it doesn't stop at award-winning dining in a space draped in velvet and illuminated by vintage chandeliers. No, this day goes beyond with unparalleled personalized service and attentive hospitality. Oh, and did we mention the Nomad London can be booked using your Hilton Honors points at Hilton.com? Hilton, for the stay.
So, you just started using LinkedIn Premium. Now what? Well, on your Premium company page, you noticed around 7.5 times more page engagement and 5 times more page views. Well done. And now, new clients are messaging you. All because you're using LinkedIn Premium, which helps you get the business growth you want. Think big, small business. Think big. Start your free trial at linkedin.com/premium small business. That's linkedin.com/premium small business.
Hello and welcome to FinTech Insider Insights. My name is David Brewer and I'm the CEO here at 11FS. For as long as people have traded goods and services, we've been inventing new ways to pay for them. From silver coins in ancient Spain to tulips in the Netherlands to digital coins being minted in California. Payments have always evolved with the times, but something feels quite different now. Since 2020, customer expectations have really gone through the roof. Even a microsecond delay in a checkout can send digital shopping carts spinning into oblivion. So in this episode, we want to ask, with customer demands only getting harder, faster and more dynamic, what does the future of payments really look like? How will we be paying in 2030? And crucially, how do we actually get there? So with that in mind, I want to welcome our guests. Firstly, we have Triona Smith, who is the Director for Go-to-Market for Visa. How's it going, Triona?
Very well, thank you, David. Nice to join you today. Thank you.
Great to have you on. Tell us a little bit more about your GTM at Visa. That's a pretty broad title. What does that mean? Well,
one of the things we love is our shortened acronyms. So I work in the product space in the European hub. So it's go-to-market for our digital products, so particularly focused on e-commerce. So anything to do with online payments. I'm in a wider group, but my concentration, my team focus typically on anything to do with authentication and tokenization. So it's quite broad. We work with our European colleagues all across the market and obviously into global, because there's a lot of alignment across the regions for Visa.
Very good. Sounds like you're going to be pretty useful for this conversation then. That's good. Well done, producers. Good job. Also with us today, we have David McGuinness, who is the Chief Product Officer over at Frisbee. Welcome to the show, David. How are you doing?
Doing good, David. Yeah, excited to be here. Thanks for having me.
Very good. For anybody who doesn't know, talk to us a little bit about Frisbee. And Chief Product Officer, a bit different in each role or in each organisation. What does that mean in the context of you guys?
Yeah, for sure. So Frisbee certainly not a household name like Visa just yet. So we're a recurring revenue management platform. So we power the business of any merchant who's got a recurring or a subscription element to their business model. So repeat purchases, things like digital media, newspaper subscriptions, all of that good stuff is where we really specialize. Focus mainly in the European market. We cover a pretty broad spectrum within recurring revenue. It's kind of right through from customer acquisition and onboarding to collecting the payments, which is kind of key to what we're going to talk about today. But then right through to things like revenue insights, helping our customers maximize lifetime value, predict churn, and so on. So it's a pretty interesting space. My role as CPO, it really means I'm responsible for the product vision and strategy. So plotting out where we want to be X years from now and how we want to get there. And a big part of that obviously is understanding market trends, trying to anticipate not just what our merchants need from us today, but what they're likely going to need from us in future and in 2030, as you said.
Very good. Well, it's great to have you on the show. Last but by no means least, another David. We've done really well on the caliber of guests, but maybe not the naming of the guests. But welcome back to the show, David Messenger, who's the CEO of Global Businesses at Ping Pong. Great to see you again, David. How's things going?
Good. Thanks, David. It's great to be back. Great to see you again.
We all need to agree who's going to be Dave, don't we? There's going to have to be a rock, paper, scissors off to make this happen. But how's things going for you guys at Ping Pong?
Very well. So Ping Pong, for those of you who don't know Ping Pong, founded 10 years ago in New York. headquarters in China, but over the last 10 years built out a global business payments network, 63 licenses and counting around the world. What we do is all things cross-border that are business. So not consumer, not domestic. We help businesses take advantage of global opportunities, whether that's directly, whether that's through e-commerce, whatever the mechanism, that's what we help solve for.
Very, very cool. That's a hell of a lot of regulatory licenses to deal with. We can cry on each other's shoulder about that one later on. But all right, we better get on with the discussion. There's a lot to talk about and some really great guests to go through this as well. I guess before we look at the future of payments, it's always good to sort of have a view of where you've come from. So if we cast our minds back to, say, let's go for 2020, pre-COVID, when none of that happened, like we can call it off like a weird dream. There was quite a different state of the payments industry. You know, the technology, the advancements, the expectations was quite different. So what felt cutting edge in 2020? Can everybody sort of cast their mind back? Was it everybody getting excited about the new contactless limit, or what was it at the time?
I'm trying to think from 2020, we were focusing on the regulation that was coming into Europe, the PSD2 SCA regulation. That was quite a heavy focus. At the time, I was Visa Secure business lead rather for Visa. So we were rolling out the new EMVCo standard, which meant there was a lot of focus on the regulatory side to prevent fraud in Europe. The focus was on fraud, which is highly important for merchants, issuers, for consumers, is to make sure that you get the balance. So that if you only focus on fraud, you can introduce other problems. You can introduce friction or you can introduce lost sales. You need to sort of introduce the balance. So 2020 for us, as we came into COVID, we were literally neck deep in the regulatory perspective and helping our clients and businesses sort of stay on the road as that came in.
Yeah, PSD2 was a good one. I think I lost several thousand hours on this podcast talking about PSD2 in one form or another over the years. But yeah, the payments industry loves a good regulation, right? If you want to standardize and make things interoperable to a certain degree, you've got to have regulation to make that happen. But David Messenger, what were you getting excited about with back in 2020?
It's essentially, so pre-COVID. COVID was, I guess, January to February. So when I was in China, so saw it firsthand. But I think what was interesting then was e-commerce was already maybe not exploding in the way it exploded later in 2020, but it was already a very, very fast growth sector. Things were moving to e-commerce in different forms. So that was one of the big trends. I think within the payment space, I think there were two things. On the physical world, I think tap to pay was really getting traction, and Apple Pay seemed very, very cool. Even though it had been around for a while, it was actually really starting to get used. And I think the thing that I thought was really interesting in terms of payments at that point was buy now, pay later, starting to really take off. And it was 2020 onwards, saw explosive growth. And I think that was a really interesting development to kind of break open the traditional model, how to finance consumer purchases.
Yeah, definitely. It is amazing the rapid change, as you say, of the evolution of those things. But how about you, David McGuinness? Was it you stacking cryptocurrency back in 2020, like waiting for the apocalypse, or what was the thing you were getting excited by?
Unfortunately, not stacking cryptocurrency, or I would be dialing in from my yacht in Monaco today and not my spare bedroom. No, not crypto. I think contactless certainly was a big thing. I think 2020 was a real inflection point in payments and fintech, and accelerated by COVID. But certainly at Frisbee, we were starting to get excited about the move towards this subscription economy. In 2019, the average person had probably 1 to 2 active subscriptions. You had your broadband provider, your TV, and that was probably it. Today, the average is somewhere between 8 and 10, which is bonkers. And we buy everything from our dog food to our coffee beans on subscription. So that surge and that change and that has really benefited Frisbee, obviously. And that's the thing that we were probably most excited about back then.
Yeah, literally a delivery of dog food came to my house today, exactly as you described. Like, I swear to God, my two dogs eat better than I do. But that's, I guess if we sort of fast forward
I'm glad
to today,
you said you have two dogs.
yeah, exactly. Times aren't tough in the Breer household. We haven't gone to eating dog food just yet, but it's lovely steak. I'm sure it's really nice. So fast forward, I guess, to today, the landscape has changed, and some of those customer problems that you were referring to, but equally the opportunities for merchants and merchant servant providers are different, aren't they? We are operating fundamentally in a different world that we were before. What are the biggest pain points you're sort of touching on across those things? Maybe Triona, starting with you there. What do you think's the biggest itch we're trying to scratch right now?
So we go back, we were looking at spend, typically $1 to $1, but after COVID, it's e-com payments were matching on the dollar spend, face-to-face payments. And then that's been consistent, and now it's just tipping past that. So we're seeing higher spend just tipping over on e-commerce by comparison to face-to-face. And when we look at the two environments, face-to-face, you don't have to explain it to anybody. You walk in, you tap, you dip. That's it. If you've got money in your account, you walk out with the goods that you went in to buy. You're not even thinking about the process. Maybe, you've, like David Messenger mentioned, that you've got Apple Pay, you've got the X-Pays on your device. You can tap at high spends for the contactless limits. Flip that to where I'm spending the same amount of money in e-com, and it's all over the place. Sometimes it's a click, one click through, and I'm out the door with my purchase. Other times the approval rates are up and down. The fraud rates go from fantastic on the really good experiences to scary numbers when you're talking about sort of naked pans, cards being presented for payment, no authentication, no tokenization. The risks are so much higher, and the confidence is lower in that as well. So from a consumer point of view, you're also presented with this varied user experience. You've gone in to buy something.
Just for the listeners on that one, naked pans is not like a weird culinary sort of. It's not Gordon Ramsay's
Jamie
new
Oliver.
selection of pots and pans we're doing. It's. Do you want to explain what you mean by that?
I do. I'm very sorry. So the pan is typically, from a Visa point of view, it's a 16-digit number that's printed on the front of your plastic card, your payment card with Visa logo in the corner, and we refer to that as the PAN, the payment account number. So when a payment is presented in the e-commerce space, when you go online to shop, sometimes you can manually type that number in and it's presented through for payment. Other times, I'm sure David McGuinness would be very familiar. If you have stored payments, you're setting up for subscription models, then it can be stored for future use, but ideally it's represented by a token rather than a PAN. And so the payment credential that's presented actually is a token that's unique to the merchant rather than your payment credential being freely available to perhaps hackers or fraudsters. We would rather see that was tokenized and bringing in that extra layer of security for the consumer. But sorry, it's just to go back to your original question, David. The biggest differences when I compare face-to-face and e-com is the fraud performance is crazy one end to the other. The approval rate opportunity varies greatly based on issuer confidence, and the user experience is very simple to so complicated that they give up and transactions are abandoned. So that's what we want to try and solve for. That's what I hope we solve for in 2030.
And that's a big objective across all of those pieces, isn't it? Solving for those things. That consistency across it is really difficult. But David McGuinness, maybe coming to you on that. What are you sort of seeing as the major pain points? I mean, you talked a little bit about the complexity. I felt very exposed suddenly talking about dog subscriptions for food and whatnot. But I think it's a true point because I've probably got I think I'm probably like the worst example. I've got like 30 odd of different ones for different things of vitamins and all of these things that happen to, all different beard oil that I go with, obviously, So, but is that was obviously a pain point you guys are solving for, but what else is out there from a customer, but also a service provider as well?
Yeah, I agree with Triona. I think the big one that we're seeing right now is that end user experience, and it's like a constant balancing act, because you want to remove friction and make it easy for customers to check out in a secure manner, but by removing those checks and by removing those frictions, you can then make it easier for scammers to jump in the middle. So it's constantly balancing between making it seamless for the people who have good intentions, but making it difficult for those that don't. So that's the thing that we're really seeing at the moment. Consumer expectations have gone through the roof, particularly over the last couple of years. They're just not willing to tolerate poor checkout experiences. Cart abandonments are at all-time highs. So the way I think we're trying to combat that is by personalization, and advancements in AI and machine learning are allowing us to make informed decisions about the particular types of consumers that we're seeing, trying to segment them and offering them a personalized checkout experience, rather than saying, here's the 15 payment methods we support, pick one. Try and make a judgment on what we think is most relevant, most applicable. Do we really need this piece of information about them, or can we remove that field from the checkout? And ultimately, what's going to get them from A to B quickly and securely as possible, and not put too many hurdles in their way.
Yeah, I mean, it's an interesting balancing act, that, isn't it? I mean, David Messenger, the balance there between removing friction from a process and opening up the door to sort of more bad actors in that way. I mean, this is the problem with the internet more broadly, isn't it? Not wanting to sound like an old man shouting at the clouds type vibe, but almost the idea of operating in a digital world kind of opens us up to pretty sophisticated problems as well as pretty big opportunities for customers, right?
Yeah, and I think inevitably as things evolve, the pendulum swings one way and then the other. And I think clearly in the last 5 years, real-time payments has become the thing. It is about real-time, instant gratification, instant solution on the payment side. A couple of things I would flag. I mean, I think Triona's right. There's huge variability in the customer experience. I mean, I had one the other day where I had to not just put in my card number, I then had to get a text confirmation, then I had to put in a memorable date, and it went on and on and on. And by then I was getting pretty pissed off. But it's there, and on the other extreme, it can be totally seamless. And that's on the consumer side. I think when you get to the business side, and this was where our focus is on the B2B side, a couple of things have really shifted. One is a huge amount of what used to be traditional import-export was done by going to the Canton Fair in China, going and sitting down, drinking Mao Tai with your potential supplier and doing a deal. And it was very much analog, old school business. Nowadays, B2B marketplaces have exploded. And so B2B transactions, B2B cross-border flows have become more like the traditional B2C online transactions, but they're not going to use cards. So it's the payment solution. First of all, it's find your supplier, do the deal online. The payments piece is then the challenge. You can't use the traditional methods for doing payments for those sort of transactions. Sometimes that means all the payments goes offline or goes out of that e-commerce environment. But now I think it's more about looking for how can you provide integrated account-to-account solutions for online B2B payments. And that's where the rapid increase of these real-time payment systems like Pix in Brazil and others around the world start to make B2B e-commerce far more achievable and facilitate that growth.
Yeah, it in a weird way opens the world up as one big marketplace, doesn't it? At that point, but as you say, you sort of need the potential to do those things in a consistent format across the world, don't you, to make that function?
And that's the challenge, because you've got all the the real time exists in local systems. Swift is not real time. The traditional cross-border methods don't work real time. So you've got to have that's what we
often ironically named as well, right?
Yeah. Yes, I have thought that sometimes. But that's what we've been doing, is building that infrastructure that connects those local payment systems into one global web. And the other point I think Triona made, it, which is key, is the rise of fraud. And we see this in B2B as well. It's scammers hijacking invoices, hijacking B2B payments. And the thing that's now coming to the fore again, where you've got to find a way to integrate local solutions, is things like confirmation of payee in the UK, verification of payee in Europe coming this year. Australia's got its own. These are all really valuable tools to help prevent real-time fraud as well as real-time payments. But how do you connect them? And that's where you've got to have that sort of global infrastructure, global network to connect those local capabilities.
Yeah. I guess, Triona, the focus very much on removal of friction. Inevitably, to David's point, that pendulum swings a little bit too far, and we sort of course correct a little bit. But most people want to solve for increasing conversion rates. So they want to reduce abandonment, they want to sell more stuff, they want to sell it quicker and more. So how do we find that balance? Where's the, because I'd say like 699,000 of the 7,000 hours talking about PSD2 was talking about where liability sits when things go wrong, right? So we can hurtle into doing something before necessarily we fully understand all the repercussions, I guess.
Yeah, absolutely. And in the end, from a consumer point of view, or a business, you're going to buy something and you're not thinking, oh, I wonder how good the payment experience is going to be. It's not even, why would it even be in your head? That's not your objective. When I walk into a store to buy something, I buy the thing. I don't wait to look forward to the checkout experience. Because when I'm face to face, I know I've got my identity, I've got either, if I'm paying with my device, I've got biometric experience on there. So when you then go into the online experience, it's the confidence of recognizing the consumer as the cardholder, as the issuer's cardholder. And that's where often the challenge comes in. So you could say, okay, well, I've got, like David mentioned earlier, he's got his passcode, he's got his PIN, he's put in his maiden name, and he's put in his details to prove he is who he is. But what better than your biometrics or your personal identity information that has that greater security that helps prove you are who you are. So in order to bring down fraudsters are very clever. There's a space there. We're no doubt we try to stay ahead, but we also try to leap forward as well. So we're not just trying to keep pace. We want to help close those gaps and where those opportunities are. So if we address, if by 2030 perhaps we bring in experiences that mean you have a better opportunity to prove you are who you are. It helps reduce fraud. It helps increase issuer confidence. If you're talking about data sharing as well, so that there's cleaner, better information, so the issuer is making a better decision, then you've got a greater opportunity to get that sales conversion. The friction that we see in the authentication experiences that happen today mean you're losing sales sometimes for no good reason at all. It's just a poor experience that's introduced. So that's where we want to see biometric device-based authentication to start to come into the fore more. It's all around the expectations of consumers, the security using known standards that will help deliver that.
Yeah,
so I think
it feels a little bit like an eventuality as well, doesn't it? And not wanting to quote your own stats back to you, but there was a Visa study that said Visa found that 74% of merchants said fraud tools and 78% said same-day settlements were critically important to running their business. So, if businesses don't do these things, there are other people in the market that will do them, and that I think is a difficult one, isn't it? Because actually, there are people putting less sophisticated processes and technologies in place that might make it really, really easy. But actually, there's a balancing act there between making customers feel comfortable, being safe, and feeling safe. Are oddly two separate notes. As much as David Messenger, it's a pain in the ass to get that text message and all of those things. There's something sometimes where you feel, no, these guys are taking it seriously, right?
There's a balance, but actually one thing I just want to come back to, which is, we tend to focus on two things. Always conversations centered around abandonment rates of cards, and then, it's friction in the payment process. I think we've got to remember, in the last 5 years, one thing has fundamentally changed this, which is the move to particularly social commerce rather than marketplace e-commerce. And so what we see is a lot of times a cart is filled. There was never any purchase intent. This is social media. This is TikTok Shop, or wherever. It's loading a cart. Play around and see what it's like. And so I think we got a latest study I saw actually showed is probably close to half of the abandonment is because there was never a purchase intent there. And then the next biggest category, we all are. The next biggest one is actually an interesting one on multiple levels, on an industry, on a geopolitical level, is that the next highest reason for abandonment is when you get to checkout and you see the shipping and taxes. That's the other big factor, is they realize, okay, the product looks good, the price looks good, but actually it's all the complexity, because so much of e-commerce now is cross-border. And particularly where it's cross-border, this issue around shipping costs, timing, taxes, that is the next big thing. And how do we create, how do businesses have a checkout process that can actually make sure that, one, they've got the right information plugged into the checkout. And so when it gets shipped, it is going to get delivered, because that's even worse when you pay and it gets shipped but doesn't get delivered, held up for extra duties. And how do you make that seamless?
It is amazing how many times a great digital experience needs to be backed off to a really great physical experience as well. So to your point, all of the logistics around the transfer of the item is as important as the ability to fulfill it. I feel, Triona, we need to go into your shopping habits a little bit more. I have to say, my mother-in-law has a running joke with all of our family about her obsession with TikTok Shop. So the random things we got for Christmas last year, like you wouldn't even believe it. But it is true. The behaviours, as you say, David, of people are fundamentally shifting, aren't they? It's not necessarily going in with just a specific intent for a specific product, but often through social selling, there is a much more of a sort of a grazing mentality. I think I've bought stuff I didn't even know I needed, which is probably the sign of great marketing, right? All right, we've said the horrible word COVID, haven't spoke about that for a little while. We've talked about PSD2. We've sort of given up our obsessions of TikTok Shop. We probably need to let the dust settle for a little while and prepare for really what the future of payments really looks like. Don't go anywhere. We'll be right back.
The new McCrispy Strip is here. Dip approved by ketchup, tangy barbecue, honey mustard, Sprite, McFlurry, Big Mac sauce, double dipped in buffalo and ranch, more ranch, and creamy chili McCrispy Strip Dip. Now at McDonald's. Ba-da-ba-ba-ba.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alicabank who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
Welcome back to FinTech Insider Insights. In the next part of the show, we're going to be looking to hear from our panel about what is the next stage of payments. What is going to make it reality? What are the problems we're really going to be solving for customers? And with that, maybe Triona, starting with you, I mean, what does the next stage of this really look like? I mean, Visa have been at the forefront of this for a little while, and it sounds like you've had various different roles at the table to make that happen. But what technologies do you think are fundamentally going to transform the industry?
We have to iron out the wrinkles on the payments, between the difference between e-com and face-to-face, like the fraud variation, the user experience, the abandonment, all of those things. So we expect to lean in on device-based biometric authentication. It gives you the security, it gives you higher confidence, the issuer's higher confidence in the information, and a greater opportunity for approval. So it's proving the consumer is the cardholder, which is from Visa's point of view, we have Visa payment passkeys, which is the authentication method, and it stays with the device and it recognizes the device as well. So it's recognizing the consumer and the device as having been set up for that payment passkey. So for David McGuinness's sort of payment models where you have stored credentials and everything on file, then you can have tokenization, where you expect to take the payment account numbers, those 16-digit numbers off the front of your card. We want them out of the system because the transaction itself may be fine from a fraud point of view. Maybe it's authenticated, but it introduces risk of data breaches. We've seen it in a number of sort of merchant environments and big headline stories. There was one in Ireland a little while ago, and all over the newspapers it says, contact your bank, cancel your card, which is just, it's a nightmare for the issuer, for the consumer, and it's bad press for the merchant and that space as well, where if the credential is tokenized and stored, if there's a data breach, it only affects the token. It doesn't affect the plastic. Everybody can, we can quietly move on with our lives, and the consumer is protected and the environment is protected. So we expect by 2030 to have effectively taken those payment account numbers out of the system and fully tokenized. We also expect to remove the one-time passcode experience because we move over to sort of a biometric-based authentication experience, which means when you go into, from a consumer point of view, you go into the online payment experience. So you're present at the payment experience. You either have your stored credential payment and you can authenticate yourself using the Visa payment passkey. Or if you're with a merchant and you think, I'm only going to be here once, don't plan to save my details, I don't have any sort of preferences to come back to the merchant, then we also have the click to pay experience, which likewise relies on passkeys for the authentication method. So it means that the consumer gets this far more consistent experience and it's federated, which means once you've introduced it from a consumer point of view, the next time you see the button, that process works, it's repeatable. So you've introduced the opportunity for federation across the merchants. It makes the authentication process much simpler, reduces the risk of abandonment in the payment experience, in the user experience of having to authenticate themselves, and gives the issuers that higher confidence for approvals.
Yeah, I mean, it's a funny way. There's so many parts of financial services that have gone a little bit full circle. Like actually, if I kind of summarize all of the things that you've said, that I mean, we used to just carry a card, and actually it was magic in the background, and it all happened, and the customer didn't have to worry about it. Right? The things you've just described push all of the complexity behind the scenes and allow the customer just to have a consistent experience in making those things happen wherever it is that you're engaging. Right? That's the dream, isn't it? Giving that confidence. But I mean, David McGuinness, what do you think? The tokenization one, I always think is such a great thing to almost, as you say, protect the pieces of information that need protecting, but fundamentally it allows you to have control of what you're exposing. I mean, that feels like it sounds obvious when you say it out loud, but it feels like such a direction of travel, right?
Yeah, it really does, and actually, tokenization has been a game changer for Frisbee. So if you think about our merchants, the biggest challenge for them is involuntary churn. So that's when a customer stops using their service or leaves, but didn't really intend to do it. It just sort of happened, and the biggest cause of that is expired card details or lost cards or things like that. So by being able to tokenize the card and not having to worry about it expiring or being lost and replaced, it means that involuntary churn almost goes away. So that's been a real game changer for our merchants, because it's so costly to acquire these customers, and then to lose them for such a trivial reason as their payment card expired is a conversion killer. So it's been a game changer, and like internally we kind of tokenization is quite a technical payments term, but we market it, at least internally, as churn prevention. This is a churn prevention feature. Tokenization is the how, but it's not the why. It's not the secret sauce. So yeah, it's been a real game changer for us. And I think the other thing, and I've already mentioned it, and look, I'm a tech guy, so AI is my answer to everything. But I do think AI is really changing the game, and that balancing act that we talked about between fraud and friction for the end user, I think AI allows us to put more of that on the back end and remove the burden of proof from the user by making intelligent decisions and more accurately identifying fraudulent transactions. And the other thing AI does is it allows us to offer that kind of deeply personalized, seamless experience on the front end for the user. So like payments nirvana is low fraud, frictionless, seamless end user experience and high conversion. And I think AI is certainly one of the tools that gets us close.
Yeah. I mean, on the tokenization side of things, and AI to a certain degree as well, like everybody, we're weird, like we're payment geeks. We hang out on a podcast and talk about payment stuff. Like it's just not normal, is it? But actually, like for normal people, things like tokenization sounds like witchcraft. But do you think, obviously we're seeing obfuscation of emails using tokenization and do you think actually seeing other industries using some of these technologies and capabilities allows it to become more adopted in the financial services industry as well?
Sorry, Triona, go ahead.
No, I was only going to talk about the concept of token actually in a user world. I had when my kids were smaller, we'd go to the theme park and buy a wristband. And the wristband was your token. We paid the money was exchanged, and that was the value. Your wristband meant you could go anywhere or do all the rides. So the concept of token has been around for a very long time. I think getting that from, and David mentioned, it's the secret sauce or not. Like the consumer doesn't matter. What they want to know is, what does it mean? Like what does it mean to them? Like why? So what? So what if you've done it? Higher approvals, we see it. We have in European e-com, it's over 50% tokenization already. So already we can see the stats, we can see the performance, lower fraud and higher approvals in the sort of mid-90s sort of for approval rates by comparison when you compare it to PAN as well. So the return, the readiness, the environment is there. It's happening already. It's just not ubiquitous yet. And I think we get to that point and everybody will go, that's lovely, thanks, move on.
Again, we get all excited about it and customers are just like, yeah, that's what we expected. Yeah, it's about, I guess the other side of this, and David Messenger, you touched on this a little bit before. I mean, obviously the future of this, and I hate to use the word omnichannel, if I'm honest with you. I think management consultants ruined that one a long time ago in terms of it having the meaning that we actually mean when we say it. But this isn't a single strain of, it's not just hanging out with your mate at the market and making that payment and it all happening together. There's particularly when you're talking about businesses, there is a much more complex value chain there of different touch points at different periods of times, and with businesses, different people who've got different levels of authority to engage with those things as well. So like it's a pretty complex tapestry, isn't it?
On the B2B side, it certainly is, and it's longer cycles. It's not the sort of the same short time frame for search, make a purchase, receive goods. It's a much longer cycle, much more complex. I think a couple of things I would say are really changing on the B2B side of things. You've got to have payment solutions that are flexible and can move where the supply chain moves, rather than just being static. I think another major thing for B2B is going to be really linking of financing and the payments. In B2B transactions, unlike consumer transactions with credit card, you've got payment plus credit built in at the point of sale. B2B has largely been, supply chain finance separate from the actual payments transaction. I think what we're going to see, there's a lot of innovation happening right now around how do you digitize letters of credit? How do you embed financing? A lot of this is, David McGuinness mentioned, the dreaded two letters, AI. AI is everywhere, but it's certainly going to be there in terms of how do you get the data to, digitize an equivalent to a letter of credit, which has been around for 200 years. I mean, it's hardly changed. It is time for change. So I think we'll see a lot of evolution in the business model, leveraging technology to link financing and the payments. And the other key issue is chargebacks. You cannot have the same sort of chargeback network rules you can for B2B transactions that you do for B2C. So I think there's some interesting things starting to move there where you look at, rather than the seller paying the network charges, it's actually the buyer. And what they're getting is actually embedded finance. They're getting that 30-day, 45-day float on the transaction because it goes through their card and they pay something for that. And rather than the supplier paying it. So I think there's some interesting things that are going to evolve there. And I think the other big thing I have to flag for the B2B side of evolution is stablecoins. And clearly the US is starting to embrace stablecoins. And if the US embraces it, that is going to shift the global landscape around stablecoins. And stablecoins have limited impact, I would say, for domestic payments. Their real impact is in cross-border payments. And so I think for cross-border B2B and the supply chain, the B2B to C, this is where stablecoins are going to have a huge impact.
I guess we're talking like every business is digital though, I guess, David. And actually, I know we've seen globally that just isn't quite the case yet. Are we sort of at an eventuality from a tipping point perspective for them? I know there was lots of research out there. I think it was one of the previous podcasts we did just in France, 5 million SMEs, only 48% of them are actually using an e-commerce platform though. So is there do you think we're at a tipping point where everything is digital when it comes to payments and e-commerce?
I think if you look 5 years out, I would say yes. I think we're going to cross that tipping point.
Yeah. And it feels like it's momentum that actually is built up, isn't it? Even in an analog world, all of the systems that people are using are digital in order to make those things happen. But I often sort of think it thinks about what the end stage that we're actually trying to aim towards as well. I know, we've talked a little bit about digitizing different processes and different things that have happened there. But I guess it really depends on where we want to get to, doesn't it? I feel like there's a opportunity for the payments industry and financial services much more broadly to do a lot more. We talk about we've said about real-time payments for forever. I think the US is still trying to figure that one out, aren't they? But the idea that essentially financial services becomes real-time, intelligent, contextual, human extendable, and social, we call it riches. I guess, Triona, in that world, what part does payments play? Because essentially, at one place, we're saying it should be so far back in the back office that customers almost don't feel the pain on it. But in the other way, it's actually not just facilitating the way that things have been done before. It's adding a whole new layer of service, isn't it?
Yeah, it's of course, it's a big question.
Yeah, drop that one on you, didn't I? Sorry.
Well, payments are obviously important, but the trading of goods, the exchange of currency for those goods is, you want the right people, whoever is genuine, you want them to make it through, and the fraudsters you stop and block. So it's critical. We had. I will name drop. Ryan did our CEO did his product drop at the beginning of May. So the Visa product drop. We're talking about AI. We're talking about, Visa Intelligent Commerce is about AI to buy. So AI is going to play a part in that as well. But we obviously have to be very careful how we introduce those things and bring everybody along on that journey. It can't be, you go running forward and without everybody sort of being on board. And there are a lot of factors to consider to make sure that the confidence, the regulation, the security, everything has been checked, and we have the checks and balances in there.
And I don't think there's one answer to that, because I think, if you think about it, it's based on the type of purchase you're making. The simplest, you can say it's like being in the supermarket and picking up that Cadbury's bar at the checkout. It's an impulse purchase. You want payments to be absolutely seamless and just instant gratification. That's one extreme. On the other, you get to B2B transactions. These are meaningful transactions. There's a whole set of control processes around the payments. You've got maker-checker rules. You've got all of this, control put in place, because these are big decisions and big moments of truth when money leaves and it goes somewhere else. And I think for consumer experiences, there's a continuum between that impulse purchase, TikTok shop purchase, through more significant purchases to things that are more like B2B, SME type purchase decisions. And I think we've got to make sure we don't get blinded by a single pursuit of one thing, saying this is seamless or this is that. It's saying for the customer, what is their need for this type of purchase?
Yeah. Well, it feels like that move to, genericizing digital capability to really hyper-personalize, like that's through all of the things that all of you are saying, that's what's really coming out loud to me, which is customers actually get a real say in how this works for them. And that really is kind of like the promise of the internet, right? Where we were all lied to at the beginning. It was like hyper using data to tailor things to individuals. But it feels like we're actually there now, which is super, super exciting, doesn't it? And I think the advancements, as you say, with artificial intelligence, explaining that to people in the way that they want to explain to them, not just that it's there, but actually being able to engage with them in a certain way is important. But so that, feels like that, David McGuinness, that hyper-personalized view of this world is really the direction of travel that we all see.
Yeah, agreed. And I would agree with David and Trina's take. I think, like we've used the word balance quite a bit here, but again, there's balance where, particularly for B2C customers, right? The payments is the how, but they don't need to see how the sausage is made, right? And I think we need to do a much better job of product marketing some of these things and talking.
Unless you're buying sausages, yeah.
Unless maybe even if you're buying sausages, it's best not to know how they're made. But for things like tokenization, the average person doesn't care about tokenization, right? What they really care about is, hey, if when your card expires, you don't have to go around and log into all of those individual portals and update the information, or you risk sitting at a toll bridge with the barrier not opening because you forgot to do that. Like that's the why. That's what customers care about, and that's what we need to do a much better job of communicating, I think.
Completely agree. It's weird, and I keep saying this out loud a lot, but it's like, it's not about the products, it's about the services. Like financial services is a services industry, and actually embedding those things in and solving real problems for customers is where organizations really succeed. So I guess, big question here at the end, and you've not got 25 minutes and 45 slides to kind of explain what this actually looks like, but I guess what's your strategy then for 2030 in this context, in a nutshell? How do you bridge the gap between where we are today and this sort of beautiful vision of the world that we sort of see ourselves heading towards? David Messenger, do you want to start on that one? Like, what's the thread that's going to get you from here to there?
It's the same one that we've had from the beginning, which is our mission is how to digitize trade. And this is, as I said, in the next 5 years, I think we're going to hit the tipping point from a B2B point of view. Things are going digital. And that's not only payments, it's also digital identity. Because the key to making everything work digitally is not just the execution of the transactions, it's actually the identity. So particularly for cross-border, it's more than just KYC, KYB, it's actually all of the risk factors around AML, which is the biggest issue in B2B transactions, cross-border transactions. So I think it is about a really effective digital identity solution, as well as the digital payments infrastructure. Some of that's stablecoins, some of it's not. I think are going to be key. But it's fundamentally going to be about creating, and what our mission is to create that sort of ecosystem where every business has their digital identity, their digital flexible account, multi-currency, and they are then free to use that, take business opportunities wherever they are in the world, once they've got that core digital capability in place.
Very, very cool. David McGuinness, you got your hands on the product roadmap. What's getting us from here to there?
Kind of piggybacking on what David has said, that once a lot of that plumbing is in place, I think then that's where personalization comes in, and a move away from these kind of one-size-fits-all experiences, because my need is very different to Trina's need, or to someone in a different country with an entirely different set of expectations. So dynamic, personalized checkout experiences, just to get them from A to B as quickly as humanly possible, is where this goes, I think.
Very good. And the last word, Triona, what gets us from here to there?
Well, we have our vision for 2030. We expect full tokenization, the introduction of, like we were talking about, the authentication, the biometric-based authentication on devices for e-com experience for reusing click to pay and VPP. That's the vision, to get us to solve some of those problems, to iron out some of those wrinkles. But what do we do today? Today, that you don't just drop all those things and expect everybody's up and running. Our clients and the ecosystem within Europe, where probably roughly 75% of transactions are either authenticated or tokenized. And it's about data quality and tokenization and using the services that we have today, introducing those enhancements so that we step towards the 2030 vision. Because it won't, I think we all agree, it won't be all one thing. It needs, if you do it so that you're only solving the problem for 50% of the community, you haven't solved the problem. You need to create choice, and you need to recognize that it can be across a couple of different avenues, so that you're bringing your consumers and your clients and merchants along on the journey as well.
Yeah, and I think from what you said right at the top of the show, I mean, it's that balance, isn't it? There's a potential for a massive increase in the sophistication of technology, but also a massive decrease in the complexity for customers. And that's the win-win. Getting that balance is right. I'm afraid we're going to have to wrap up the show. I think we could probably talk for another hour, or just on the identity point or the tokenization point, or we'll have to get you all back to continue this conversation as it goes. And we'll get you all back in 2030 and figure out how you've done as well. Like, not wanting to call it a report card just yet. But we do have to wrap up the show. Thank you so much for everybody for coming along. Where can people learn a little bit more about you and your business, David McGuinness?
About me, not so interesting, but LinkedIn. But more importantly, Frisbee.com is where you can learn all about what we're doing at Frisbee.
Very good. David Messenger?
On LinkedIn, and pingpongx.com is the website.
Very good. And Triona?
Okay, LinkedIn. But so we have the visa.com website, but we also have the product drop, the full videos available on YouTube. So I definitely recommend go and have a look at that.
Yeah, it's pretty cool. There's some exciting stuff in there. Definitely worth checking out. As for me, you can find me lurking mostly on LinkedIn these days, so come and connect over there. Thank you so much for listening. If you like what you heard, follow the podcast, and don't forget to leave us a review. It helps us make the show better and helps other people find it as well. As always, if you want to join the conversation, you can find us on pretty much every social media channel. At this stage, just search for 11FS or FinTech Insider, or if you really want to, email us on podcasts@11fs.com. Thank you very much for listening, everybody. Goodbye.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank, who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.